Well, welcome everybody to the 2015 Teck Annual Meeting. And as I begin my presentation, I wanted to highlight the theme of our annual report, which was adaptability. Last year was undoubtedly a challenging year for our industry, but it's not the first time that our company and our industry has faced difficult landscape. We've been in this business at Teck for over 102 years, and we've proven time and time again our ability to meet the challenges of a changing world. And that's why I believe the word adaptability so aptly describes the spirit of our company. In 2014, that spirit was exemplified by our efforts to control costs and position our company for future growth. But before I go any further, it is required by securities regulations. I need to draw your attention to the important note concerning our use of forward-looking statements and information in this presentation. Forward-looking statements involve risks and uncertainties and are based on numerous assumptions. Many factors may cause actual results to vary, and certain of these risks and other factors are described in our public filings with Canadian securities regulators and with the SEC. We do not assume the obligation to revise or update any forward-looking statements except as required by law. So I want to start by thanking some people who earlier this year announced their retirement from our management team. Bob Kelly, you saw moments ago, our Vice President of Health and Safety. He will be retiring on June the 1st. Bob previously worked as General Manager of our Duck Pond operations, where he helped build a strong culture of safety and community engagement. He carried that passion into his current role, where he has been instrumental in expanding our safety programs and systems to help us achieve our vision of everyone going home safe and healthy every day. We want to wish you all the best in your retirement, Bob, back home on the Rock, and I hope our paths cross many times in the future. And Dave Buree, our Vice President Copper at Chile, in our Chile operations, has also announced that he will be retiring early next year. David first joined Teck in 1979 and has held a number of positions over the years, working at QB, at Polaris, Cajamarquilla, and Petaquilla. Since 2008, David has led the growth of our Chilean copper business and built a strong team in Chile. I was there with him in Chile last week, and please join me in wishing both David and Bob very, very good future retirement. We've also made a number of changes in our senior management team this year. In 2014, Shazad Barmel became Vice President, Strategy and Development in Copper. Shazad started at Teck in 1992 as an engineer in training, and he has held progressively more senior roles across the company, including Manager of Operations at Trail, Director of Business Improvement for Teck across the company, but based here in Vancouver, and then General Manager of Operations in Chile. Larry Davey became Vice President Development of Coal, and Larry was previously General Manager at our Elkview operation, and before that at Pogo in Alaska, and he also held several senior roles at Trail operations. And earlier this year, Chris Deckert became our new Vice President Copper Operations in Chile. And Chris was previously General Manager at Highland Valley Copper Mine for the last several years, and Vice President of Corporate Development at Antamina, our joint venture. And then also most recently announced, Andrew Stonkus was appointed Senior Vice President of Marketing and Sales. And Andrew has been with Teck since 1988, and he brings over 30 years of marketing and sales experience in the mining industry, and he will be instrumental in the development and implementation of the overall marketing strategy for Teck's copper, zinc, coal, and energy products. And so we wish all of those four gentlemen all the best in their new positions. Now, I'd like to begin by talking about our core value of safety. As I've said many times before at Teck, nothing is more important than the safety of our people. And in 2014, we developed and implemented a new high-potential risk control strategy at each operation to prevent serious injuries or loss of life. And we continued to build on our safety performance as our total reportable injury frequency was 25% lower than in 2013, and our HPIs, our high potential incident frequency, declined by 22%. And despite that progress, unfortunately, we were deeply saddened by incidents that resulted in 2 fatalities at our operations in 2014. We carried out detailed investigations in each case to learn as much as we possibly could and to implement measures to prevent a reoccurrence. Now, these incidents reinforce that we cannot waver in our efforts to build a culture of safety across Teck and to constantly improve our management of safety hazards and risks at all levels. We must continue to work to achieve our vision of ensuring everyone goes home safe and healthy every day. Turning now to our financial results, 2014 was a year marked by oversupply and declining prices for a number of key commodities across the mining sector. But our company and our employees demonstrated resilience in the face of these conditions, achieving significant cost savings and maintaining positive cash margins at each and every one of our operations. Our revenues were $8.6 billion, with gross profit of $2.9 billion and adjusted profit of $452 million. And while these numbers are down compared to 2013, due mainly to lower commodity prices, we continue to maintain a healthy balance sheet. We closed the year with a cash balance of $2 billion, and we have only $300 million of long-term notes due this year and nothing due in 2016. We did pay $518 million in dividends at the rate of 90 cents a year. I note that since that dividend was raised to 90 cents on an annualized basis in Q4 of 2012, commodity prices are down 24% in US dollar terms and margins are down over 25%. And accordingly, yesterday we announced a dividend of 15 cents per share, and this reduction brings our dividend payout and yield more in line with the current commodity prices and outlook and ensures balance sheet strength and flexibility for future capital expenditures or other capital allocation opportunities. In light of current market conditions, we have focused on the factors that are within our control. And this has included a major focus on cost reduction, which continues to deliver results, with significant sustainable operating cost reductions being achieved. As a result of the hard work of our employees, in 2014, we reduced unit costs at 10 of our 13 operations. We also responded to conditions by reducing our full-year CapEx by approximately $400 million compared with our plans at the start of the year. And thanks to our cost reduction efforts over the past 2 years, we've realized approximately $640 million in annualized savings to date. And to put that in context, those savings are approximately equivalent to last year's gross profit at our Red Dog zinc mine. And Red Dog had a good year. And as we look at 2015, we are continuing our strong focus on cost reduction to maintain our competitiveness and ensure we emerge stronger from this current price cycle. This year, we've targeted an additional $100 million in savings through operating excellence and production maximization at our operations while continuing to prudently manage our capital spend. On the operational side, I'm pleased to report that we either met or exceeded our mine production guidance in each of our business units. In particular, our zinc business unit significantly exceeded guidance for concentrate production. And thanks to our continued focus on cost reduction, we also came in below our cost guidance for both our copper and our steelmaking coal business units. And this demonstrates the resilience of our asset base and our ability to meet production targets while controlling costs. We also achieved a number of important milestones in 2014 at our operations. We achieved record annual zinc production at Red Dog Mine of 596,000 tons, an 8% increase over last year, and I got to say, to do that in its 25th year of operation is just a terrific testament to everybody associated with that operation. In our copper business, we achieved record throughput in Antamina of 138,000 tons per day. And we also achieved record annual steelmaking coal production of 26.7 million tons. And while we have significantly reduced our capital spend, those projects that have been undertaken have also been very well executed. The mill optimization project at Highland Valley was completed in 2014, and the benefits of that project are reflected in a substantial increase in mill throughput, which has exceeded the design capacity by an average of around 10,000 tons per day, something that we are really proud of. Our Ponderay mine was successfully restarted on time and under budget, and this quarter we expect it to hit full production. We also completed construction of a new acid plant at Trail Operations, which has increased reliability and environmental performance. Now turning to our Fort Hills oil sands project, obviously the recent decline in oil prices has been the subject of much discussion. However, Fort Hills is a 50-year project and will operate through multiple price cycles. So short-term oil price weakness does not affect our decision to proceed. Operating costs are expected to average under $30 per barrel of bitumen over the life of the project, which will generate significant free cash flow over a range of oil prices and exchange rates. And during construction, lower oil prices have reduced pressure on skilled labor and contractors, so that's a real benefit for us. As you can see from the slide, construction at Fort Hills is now well underway. This image shows the progress on the primary separation cells and flotation columns. Engineering is now over 75% complete, and by the end of this year, we expect construction to be approximately 50 to 55% complete. Our capital cost estimate has not changed since we sanctioned the project in 2013, and the project remains on schedule, and we are still hopeful that we will be able to complete this project both under budget and slightly ahead of schedule. We've also made further progress on our work in sustainability. In November, we received approval from the BC government for our Elk Valley Water Quality Plan. And this plan will address water quality issues throughout the watershed and facilitate permitting for extensions of our 5 coal operations in southeast BC. We also continue to make progress towards achieving the goals outlined in our sustainability strategy, and we are on track to reach all of our short-term 2015 goals that were set back in 2010. Teck's leadership in sustainability was recognized again over the past year by several of the world's most credible corporate sustainability rankings, and among those we were named the top-ranked Canadian company and the top mining company worldwide on the Global 100 Most Sustainable Corporations list by the media and investment research company Corporate Knights. We were also named to the Dow Jones Sustainability World Index for the 5th consecutive year. And while we know we have more work to do in sustainability, these awards do demonstrate that we are moving in the right direction. Shifting now to the market outlook, beginning with copper. Despite the recent price declines, our copper inventories worldwide remain near their historic lows, and continued mine production slippage, including what we learned overnight from BHP, has been eating away at the projected 2015 surpluses. And given steady demand, production disruptions, and the challenges to new mine production to bringing new production online, we could be back into a deficit in pretty short order, which would put upward pressure on prices. There are also very positive signs in zinc. Zinc stocks have continued to fall for the last 2 years, and despite still being relatively high, stocks are half what they were 2 years ago. In 2015, we expect that the closures of large mines will continue, with anticipated closures of both Century and the Lachine mines, and both those closures have been moved up in recent days. These closures are expected to reduce annual global mine production by more than 1 million tons of contained zinc, which in a market that's about 14 million tons is quite significant. We expect the market to record a small deficit in 2015 before slipping into a very significant deficit in 2016 of over 500,000 tons. And just to put that in context, the whole inventory on the London Metal Exchange is about 490,000 tons. In steelmaking coal, the market continues to be oversupplied, with prices at their lowest levels since 2007, and on a spot basis, even lower than that. And at the same time, demand in China has been slowing, which has pushed out the timing of a recovery. Looking ahead, we expect to meet or exceed the 2015 production and cost targets for each of our copper, zinc, and steelmaking coal operations. And at the same time, we will embed the $640 million in cost savings that we achieved over 2013 and 2014 in our operations and our functional groups and within the head office. And we will also target an additional margin of $100 million for 2015 through operating excellence and production maximization at our operations, while continuing to prudently manage our capital spending. We will maximize learnings from the construction of Fort Hills and work on our plans to market our share of the bitumen. And we will continue advancing our Quebrada Blanca Phase 2 project, albeit at a slower pace, while working to achieve significant capital cost reductions and considering opportunities to enhance the value of all of our projects through partnerships. So in summary, in spite of weaker commodity prices, our financial position remains strong, and we remain well positioned for when markets improve. We are focused on controlling the controllable by meeting production targets while reducing costs. And we are building an energy business that will create value and significant cash flow and further diversify our portfolio for decades to come. And the long-term outlook for our major commodities remains promising. The business is cyclical, it always has been, and it will recover. Thank you very much, and with that, I will turn it back to Warren Seifert for questions.